Hi, welcome to Market in a Minute. We believe there's a 10% correction that will occur sometime in the second half of the year, but first we're going to see a rotation. The rotation comes and goes, hasn't been sustainable, but we think we're going to see a rotation in some of the better sectors of the market that have not performed like the technology group has. And after that rotation has occurred, then we think we're going to get the correction to happen. So we want to focus on healthcare and energy. And then we have a good update on some of our biotechnology ideas. There's a lot that's going to happen in that sector before year end, hopefully. So can the market hold up if the tech sector tumbles? Not a chance in hell. This is not going to happen. So let me walk you through that, why we say that with confidence. So the technology sector is not quite 50% of the S&P 500. It's 40%. So if you throw those related companies that are really technology companies into the technology mix, you get nicely over 40% in tech. That's way too much. Living through 99, 2000, 2001, 2002, it takes a while for it to play out. The technology sector wasn't as large as it is now. And everybody says, well, this is it's not the same. These are quality companies. But it doesn't really matter. If you blow so much air into a balloon, it might be really good air, but it's still a balloon and it's going to pop. So if you look at the top three stocks in the S&P 500, NVIDIA, Microsoft, Apple, that's 21% of the S&P. There's never been another period like it. You look at the top six stocks in the S&P, that's roughly 32% of the S&P 500. It's way too much. There's too much concentration in the markets in the one sector. Even though those fundamentals might be pretty good, there's too much concentration. The valuations got too high. There's too much money over there. So it's going to have to move, and when it moves, the market's going to drop. Just think if you're a big fund manager, so you're running a focus fund, it's $20 billion and you're loaded with these stocks, you had a great year or a great couple of years, what do you do about it? Not a whole lot. You just got to write it down. So think about this. If you could hedge your portfolio, if you got these gains in it, some of our clients have some nice gains in technology. It's a strategy you should think about protecting that downside with an inverse ETF on the S&P 500. Now, I wrote a white paper. I'm going to send that out in the next week or so. I think you'll find it really helpful. And look at this chart here. You got the technology index. Okay, it's up 66% over the last 2 years. 66%. You got the equal weight S&P 500 up about 20%. So there's roughly a 40% spread between the two. So you can see the concentration of what's happening on the technology sector versus the overall market itself. Now, NVIDIA, everybody knows about NVIDIA. It's had two parabolic moves, one here, again, big one here lately, extraordinary move here lately, straight up. The problem with parabolic moves up is they have parabolic moves down. They just don't go sideways. So if you look at this chart, if you have that correction in the stock price down to take out that parabolic move, you're back down to $90. It closed at 118 today. The stock was down 6.66%. Okay, so let's look on the rotation a little bit. So we think that the sectors that look probably the most interesting is healthcare and energy. But what do you do in this environment? So we think using the equal weight S&P 500 makes a lot of sense. So we think there should be a big warning sign on the S&P 500 itself that it has 40% in one sector of the market. This has never happened before. Okay, big warning sign. And we think that going forward, what I'm going to do for my clients is to start using the RSP. Now I can hedge my portfolios, right? So I'm not so worried about the S&P 500. If it starts to go down, I can protect myself. I don't have to take those gains. But with new money coming in that I want to deploy, I can buy the RSP. I can buy different sectors of the S&P 500 that I think are more timely, and or I can buy great companies. There's a lot of great companies that have reasonable valuations still. So that's a focus as well. Making a long list of those companies that I want to buy after this 10% plus correction that we see coming. So thematically, what makes sense? The healthcare sector makes a lot of sense. You got a lot of aging baby boomers. There's a lot of new products hitting the markets, like these weight loss drugs. And there's 10 million more users of healthcare that just walked across the border in the last 3 years. That's quite a bit. So there's growth demographically, growth with new migration, and growth with the energy sector. Okay, so just generally speaking, Biden is not well liked in the Middle East. So the Saudis are really, the main guy in the Middle East. They don't like the Iranians. So there's a problem there. So they're enemies. And Biden has been supporting Iran for a while now, really pumping up their economy by relieving all the restrictions on exporting oil and other things, right? So what's going on is we think the Saudis will like to see oil inventories drop between now and the election day, so which will cause oil prices to go up. So they're just going to slow down their production of oil for a while, let the oil price go up. We don't know where it's going to go. It's a commodity. It's hard to say, but it's over $80 again. $90 would not be out of the cards. So maybe it goes to 90, possibly 100. If that's the case, whoever is running against Biden or whoever is in Biden's place is likely going to win. But look at this seasonality. You got beautiful seasonality in front of us. So we're right about here, right in this middle dark line here. And we got up until almost October 3rd, my birthday, before it starts to roll over seasonally. So we like the oil stocks as well. Now, the election. This reminds me of a little bit of Ali Frazier. You got one guy that thinks he's the greatest ever, very good talker, and the other guy doesn't talk very good at all, and is a little bit slower, okay? That's all I'm going to say about that. So we don't think that anything that's significant got to come out of this debate. So we think that the policies of the two men are completely different. Biden is very inflationary. His policies are just drive inflation, will keep the Federal Reserve tight for longer. And what we're wondering about Trump, because Trump has good economic policies, is will he start to cut back on government spending? So think about this a little bit. So the government deficit was expected to be about 1.6 trillion for this year. Now it's expected to be about 2 trillion. So it's a lot higher than expected. Some of that's come from increased spending on immigrants. We think that the migration of people, of those 10 million people, is improving the growth of the economy by about 1%. Now it's being transferred from the government, state or federal, to the migrants, but it's still contributing about a 1% growth to the overall economy, and we think that'll turn into a tax at some point. So there's clear differences between the two men. Kind of wondering, again, what does it mean if he's in office? What does that mean exactly? Because we know what Biden's policies look like. Is Trump the old Trump, or is he going to focus on the big elephant in the room, which is the deficit and the debt? To me, that's really important. Okay, the fun part, biotechnology. Why do we focus on small cap biotechnology? Because that's where the money is, right? So that's where you can make really big returns. We love this space. It's inefficient. It's really time consuming, but we find really interesting stocks in this space. So if you look at Veru, which is one of our best ideas that we have right now. So the GLP-1 space, you lose weight you lose muscle. That's the problem. Losing that muscle is a big problem. Verdi's come down, went from where we initially started buying it in the 40-cent range. It ran to $1.60, so it had a big move, right? 4x. Now it's back down to 80 cents, 90 cents. We think it's got another run in it. So we think that the data, the 2B data to be reported, phase 2B to be reported in December, it's going to look good. We're confident in that because this company knows how this drug performs. They had in 5 other cancer trials before they switched the indication to obesity. So they know how the drug works. So we're kind of excited about that. Altimmune, okay, this is, as you know, we've been in the weight loss space for a while with Viking baby, in that space for a weight loss, and we think Altimmune might even have a better drug. So the focus now is on the lean muscle mass. So losing weight is great, but if you're losing 40% of it being muscle mass, which is what the GLP-1 drugs are currently doing that are approved, that's a lot of muscle mass to be losing, particularly if you're elderly. So with Altimmune, you lose about 21.9% muscle mass off their phase 2 data. They just reported this. The stock had a nice little reaction when they reported it. So there's a lot of fat being lost with this particular drug. This could be the best-in-class drug. We think this company will be bought out. So the conversations and readings and conference calls with this company, they need a partner. They're going to get a partner to develop this drug. And if I was the partner coming in, the large pharmaceutical company, I would just buy the whole company. Stock, you can see the stock here in the 7s. We think it could go high. We think it could go, 3 times where it is currently, and that would only be back to kind of where it was in 2022. So thinking about the big picture with biotech, it's a sector that is not economically sensitive, and these companies have been, depressed from the high in early 2021. They're undervalued as a group. There's a lot of things that will happen between now and the end of the year. One more update. So Checkpoint, if you remember this is one we kind of struggled with for a while. We think they've cleared things on getting approval with the FDA. So we think they're going to refile the drug, and we think by year end that this drug likely gets approved. Who knows, it might flip into next year. But they have an immunology drug that competes with Keytruda. It's for a small indication, but we think that this could be a really interesting drug and could be built out into a bigger platform over time. And it works better than Keytruda. So one of the biggest drugs in the world, this is a similar drug, but it works better with lower side effects. So Checkpoint is one that we've liked for a while. We think there's some catalyst in front of it could really drive that stock price up. So we own all 3 of these stocks that we talked about in our biotechnology strategies, and we own some of these in our tactical strategies as well to get that extra alpha in the portfolio. So just in general, we're being defensive. We think there's a rotation to occur. Hopefully that gets some of our stocks moving that we own, but we think really strongly we're going to have a correction in the second half of the year. And, get your popcorn out and enjoy the debate, but we don't think anything's really going to come out of it. But we are listening for what Trump's plan is for cutting the budget deficit. We think that's key. Thank you very much. Please come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. We'll send that to you every week if you don't already receive it. Take care.